Hello, and thank you for joining us at xm.com. We'll be looking at the week ahead. It holds two policy meetings by central banks and, of course, crucial Flash PMI and inflation data. I'm Cristina Marujos. With me today is our lead investment analyst, Raf Boyadjian. Rafi, starting with the United Kingdom, the Bank of England meets on Thursday, and it's expected to raise rates again. Now, inflation in the UK has yet to decline substantially. Thus, could we see a bigger 50 basis points hike this week?
Well, Christina, that is actually a very sensible question because looking at at all the headline economic data that we've been getting, we should be expecting 50 basis points. The question is the Bank of England willing to go quite as aggressive as doing another 50 basis point rate hike? The answer is probably they will play it safe and raise rates by just 25 basis points. Now, they do have some reasonable concerns regarding the UK housing market, which is showing some notable signs of a slowdown. And actually, the situation is expected to get worse in the housing sector because a lot of homeowners that were on fixed rate mortgages, they will be renewing their policies and they will be going on to higher mortgage rates. And so we could see a more notable slowdown in consumer spending because of that in the coming months. But if you look at the other data, now one of the reasons the Bank of England was proceeding very cautiously at the beginning of this tightening cycle was because their forecasts were showing that the UK economy would be very sensitive to even the smallest rate increases, and therefore there could be a recession. We haven't had a recession. We haven't seen that much of a significant slowdown in consumer demand. More importantly, which is a big risk for the UK economy and for policymakers, is the fact that wage growth in the UK is running around 7%, and the labour market remains surprisingly resilient. So probably what the Bank of England is going to do, they will raise by 25 and signal more rate increases. Now, for the pound, on the other hand, because this is going to be a meeting where we're going to get a press conference nor a new set of economic projections, and the Bank of England is unlikely to make significant alterations to the language in the statement, the data could play a more important role in terms of where the pound goes, because we do have the next set of CPI data coming out on Tuesday. This is going to be very important because last time we saw core CPI shooting higher, even as the headline rate came down. So further strength in core CPI will almost certainly mean that we're going to get a lot more rate increases from the BoE, even if the BoE refuses to give us a very clear forward guidance. And then on Friday, we're going to have retail sales and Flash PMI numbers. So if we get overall a positive set of numbers, that could really reinforce the pound's bullish path against the US dollar.
I see. Now, looking at the Eurozone, the latest data showed that the region has entered a technical recession, so the Flash PMIs for June will be crucial in deciphering whether the economy is rebounding or maybe even heading deeper into recession. So what are we likely to see in the numbers?
Well, probably we're going to get, at least based on the forecast, a slight moderation in the PMIs for the, at least preliminary readings for June. Yes, we do have a technical recession in the euro area, but it's not a broad-based recession. It's only a few select countries that are kind of going to a rough patch at the moment. Overall, the economy, there is still some momentum there, as we've been seeing from the PMIs, and that's why the ECB is determined to keep on raising rates. And we haven't, even though we saw the headlines about a technical recession, we haven't seen a huge impact on market expectations for the ECB rate path. So the euro could well enjoy continuing to rise against the US dollar, following, of course, the past week's decisions where the ECB raised rates. They signaled more to come. The Fed, on the other hand, decided to pause, and markets weren't very convinced by those signs that the Fed they're going to pause, but then maybe raise rates a couple more times. So the euro really is on a fairly solid uptrend, at least in the short term.
The Swiss National Bank also meets this week. Inflation in Switzerland has been quite tame compared to other countries, and yet we got hawkish language by the SNB's chairman, thus increasing the odds of a bigger 50 basis points hike this week. Could such a move, though, be justified, and how can the franc perform?
Well, one way of justifying a 50 basis point rating is just simply looking at the fact that the SNB only meets 4 times a year, so they've got less opportunity than other central banks to regularly update their policy. So you could say maybe they've got a bit of catching up to do. So that's why they might, even though we're seeing inflation in Switzerland come down quite rapidly, they may still go by 50 basis points because based on what we've been hearing from the SNB chairman, Thomas Jordan, recently, there's still quite a bit of concern about second round effects, that even though inflation is coming down now, at some point it might start to go back up again because, of course, we still have some inflationary pressures globally. Yeah, inflation, it's basically the enemy of the world right now. Switzerland, it's only 2.2%. So there's obviously less pressure for them to do more. So even if they do go with 50, the question is going to be, are they going to signal more rate hikes after that? And possibly that's what the reaction in the Swiss franc will depend on.
And lastly, let's look at Japan. Inflation numbers will be one of the highlights of this week. Could the report change the Bank of Japan's stance on monetary policy moving forward?
Well, we just had the Bank of Japan decision. They didn't really change anything, no surprises there. But that doesn't mean that we're not going to get any changes from BOJ anytime soon. I mean, looking at this inflation numbers, we're expecting to see the core CPI rate moderate slightly to 3.1%. So even though inflation appears to have peaked, that doesn't mean that the Bank of Japan is unlikely to begin tightening, because the longer that inflation remains above their 2% target, the more likely that the Bank of Japan will eventually exit all of its stimulus policies. So we may not see huge reaction in the yen just yet, but I think possibly if we get closer to the July meeting and all of the data is still fairly upbeat, Japan's economy is actually doing not too badly at the moment. The Flash PMIs hopefully will confirm that next Friday. So we could see the situation changing maybe sooner than expected in terms of BOJ policy direction and in turn the Japanese yen. But for now, unless there's a big upside surprise to the CPI data, probably the yen will continue to struggle as it's been doing this year.
Rafi, thanks so much. This was the week ahead here at xan.com.